you ready to learn about the property market? Then you're in the right place. This is Everything Property by Pivotal Homes, where we connect Australia's best developers, agents, home buyer specialists, wealth creation experts, and property advisors to the people of Australia. Broadcasted from Whitehorse Studios on the Gold Coast. And now, here are your hosts, Hayden Ashton and Tom Egan.
Welcome to Everything Property by Pivotal Homes, where we connect Australia's best developers, agents, home buyer specialists, wealth creation experts, and property advisors to the people of Australia. Today's guest is an absolute legend in the finance industry. He began his foray into the world of finance in 2004, where he began his career at ANZ Bank. Within 18 months of working for ANZ, he became the youngest mortgage specialist in Australia. He's been a top 100 broker according to MPA magazine for the last 7 years, voted 4 times top 30 brokers under 30, is the winner of Broker of the Year, Best Residential Broker, and Best Branded Office according to The Advisor, and he is now the owner of Mortgage Choice, Brisbane CBD, Sunnybank Hills, and Brisbane North. It gives me great pleasure to welcome Matt Cunliffe to the show. How are you, mate?
Good, mate. Good. Thanks for having me.
Mate, thanks so much for joining us today. In the past, we've covered a heap of different stuff relating to property and finance, but I suppose not from an angle whereby you have so much exposure, and particularly with such a big brand like Mortgage Choice, who are public, and cover, I suppose, the wider Australia market space. So it's going to be really interesting to touch on a heap of that stuff. But beforehand, what we like to do is, I suppose, provide the viewers and the listeners context of yourself, your journey. I mentioned a few things there, your journey into finance, but also Mortgage Choice and the business and what you're up to at the moment.
Yeah, all right. So, I mean, my background, I'm a Kiwi, so I moved over to Australia.
We'll cut it now.
Yeah,
then.
Sorry. It's all right. So moved over in 2006 with ANZ. So, I was lucky enough, dropped out of school early, like to get myself and try a lot of different things. So, got into year 10, I think it was, and managed to get suspended in the first week, and then went through year 10, started year 11, and had the shits with it. So bounced in the first week, and went and worked for a little bit, and then jumped into a university course. Fortunately enough, my scores in my younger years at school were good enough to get me into university early in the piece in NZ. At the same time, I started a part-time role at the bank, and then got a thirst for money. So left study and went and worked full time, and then wanted to get out of the country and see more of the world. So luckily enough, ANZ had an opportunity to transfer from New Zealand to Australia, and fell on my feet and ended up in Noosa.
Yeah, right. So what a place to start your life in Australia. How good is this?
So I ended up coming across to Noosa, senior personal banker up there for ANZ. Then moved down to the Gold Coast, got transferred into the mortgage specialist role, and just took that on board. Had a couple of personal issues pop up with a partner that I came across from New Zealand with, and we ended up separating. And then I took 4 months off and went and travelled Europe, and then came back and needed a job. It was right in the middle of the GFC, so unfortunately for me, the bank was on an employment freeze, so lost my original job. Couldn't come back and apply for it because they weren't taking employees on, and jumped on Seek. Happened to find an admin role at Mortgage Choice. Applied for that, didn't get it, but got offered a broker's role.
Yeah, wow.
So that's, ended up where I am today. That's what started with it anyway. So I ended up, working for the business that I now own. Started with them in 2008.
Wow.
And then bought the owner out in 2015. And since then I've took on a couple more franchises.
And I suppose that being the fact that, a lot of businesses, you sort of see them get bought by people who haven't experienced, I suppose, the day-to-day. So when you're working with your staff, you can look them dead in the eye and say, I've been there, I've come across those challenges, how can I mentor, how can I help? Lean on me because I've been where you've sat.
Yeah. So I literally had that conversation with one of our guys on Monday, saying he was proud of, he got to see how the business was, how I run the business and that sort of stuff. I said, you see how I run the business, but you've never seen, you started with me 3 years ago, you didn't see me in your shoes for the previous 7 or so years. And having been able to do that and start in a very junior role, and then move into a management role before I owned it, and essentially help grow the business, and then now be in a position where I can do the same thing for my guys. It's unique. It's good. It's allowed me to be a bit more on their level and able to generate a really good working relationship and a family environment in our business. And so my wife's also involved in the business. She's there 3 or 4 days of the week, and we just we're very proud about our staff retention and the enjoyment that our guys get and girls get working for our business. So that's probably one of the. And
I suppose it's a culture thing too. Like I've been in amongst your officers and your staff, and it's not a typical employee-employer type scenario. It's just almost a group of friends working towards the same sort of goal, really.
Correct, and there is a fine line to tread there. It's you very quickly can end up in a mateship situation all the time. So it's been a bit of trial and error, and just working through that. I've been in the business. I've got people that I'm now very close with, and I've also been in a situation where there's people that that in the past before I was an owner, we just don't talk to anymore. So not for anything other than they just the cultural fit for them wasn't right. So
yeah, and so 16 years ago you started your foray into finance.
Is that long ago?
Yeah, that's 2004. Mate, what's been some of the biggest? Have you seen sort of some? You have seen massive changes. Is finance now, because I made a comment to someone the other day when I first started the industry, 8 or 9 years ago. I used to sort of get a feeling like brokers were order takers. It was a lot easier. They just get the docs in and process it, and all would sort of run smoothly. But I feel those days are long gone. The broker's job is so much more, I suppose, heavy lifting now in relation to massaging and working it through, and with all the finance rules, regs, and red tape, it's not as easy as order taking anymore, is it?
No, when I first started in the finance game, especially coming to Australia, broking in New Zealand is not what it is here.
Right.
Coming across to Australia, and the broker was almost the enemy. Being a retail banker, it was that was sort of how you were not taught, but it's sort of that's what they came across as. You had to understand what they were able to do to be able to work as a retail banker with a broker, and then I guess for me, stepping into the broking role from a retail banking role at the time of the GFC, you had to be on your toes. You had to be the guy that was prepared to come up with a solution, work more diligently, and not just take a request and knock it through. I think I was probably lucky in the fact that I came through at a time where you had to use a bit more than just a request to move things through.
And that's what I remember when we first got introduced. It was because you weren't necessarily just going to the four majors. We were looking at second, third tier, if necessary, to get finance deals across the line, and going that extra mile to research and find what's going to get this deal across the line.
Yeah, I think a big risk with brokers, and especially in the past, where there's been big swings in commission rates and that sort of stuff. Some brokers just get comfortable. Generally speaking, a broker will have 1 or 2 lenders that they're really comfortable with. They probably pay well, and they'll have a couple of backups that they can go to if the wheels start to fall off. Mortgage Choice set up as the brokers get paid exactly the same whether we're going through Bank A or Bank Z. So the income piece for us doesn't even come into it.
So important though, that isn't it? When I hear whereby there's differences in, and we were speaking last week with Jack Corbett, if there's differences in commission rates, unfortunately, there's always an element of human greed in place that's going to favour that result at commercially. Exactly right, at the detriment to the customer.
Yeah, and I think that's one of the biggest things I'm proud about with the Mortgage Choice brand is we can offer that to our customers. I've never had the opportunity to decide where I'm going, where I'm taking a customer based on my benefit. I can make a lot of money if I do right by the customer. I do right by them, their friends, their family. It's a volume game, and that volume's generated through you doing the right thing by a customer. Taking the commission piece out of it, you don't have that to worry about. Yeah. So going back to finding that right solution, I've never had a specific number of banks in my pocket because of that component of it, and because we see a very vast style of client, I've had to be very good at knowing a lot of different bank policy, and it's not just a rate game. It's yes, you might want the best rate. Everyone wants the best rate. That goes without saying. But what's good is a super low rate if you're not going to get the money.
Yeah, that's right.
Yeah. You're not going to get the home.
And when rates are like they are, they're so low, the difference of 0.25 half a percent is not going to,
Negligible.
it's not going to make much of a difference.
No, you'll get that. It's a cost of doing business, right?
Yeah.
Like and we had the conversation with a number of clients, but it's educating them and making them understand, or getting them to understand and come along with you through your thought process and decision making process as to why we end up at a certain bank. Rates very, very, basic.
Small part
Anybody, you talk about order taking.
Yeah.
Yeah, if you want to go and get a cheap interest rate, that's an order.
Yeah, that's right.
Yeah.
And what's the, for people listening, talk to us about why a broker is such a better option than going to like a retail banker.
A broker, an experienced broker's seen a lot, right? And a good broker is almost like an encyclopedia when it comes to lending. So if going and seeing a broker, you're not just getting one set of rules, you're getting multiple sets of rules. Going into a bank, we've seen it so many times where a customer's gone into a bank, and that bank themselves, they've gone and seen a retail staffer. Yeah, a lot of this is my interpretation, my vision, the way I've seen retail banking is a lot of the stalwarts in that space, they're either in head office and not customer facing to retail clients, or they are behind the teller, which is, they're there to have a conversation, take your money, bank your check sort of stuff. The people that sit in the personal banking space, they probably haven't been, I'd say a fair number of them haven't been there very long. And therefore their skill set or their experience is a bit less. Now, yes, you've only got the one bank's policies to sell, but too often we see that person make a judgment call on the client's position, and they come to us and go, I've went and seen, a bank ABC, and they've said no. I go, well, hang on, I know that policy intimately. I know it can work. Submit it and get it approved.
Yeah, by the same bank. Yeah,
the same bank.
Yeah, happens.
And there's no difference, right?
No difference.
There's no difference to going to, Bank A and going through you to go to Bank A, except you get the options or the expertise.
Correct, yeah. Like, and the banks, legally there's not allowed to be pricing differential between broker and bank direct. They're supposed to offer the same. Yeah, we might know how to offer, go and ask the right questions to get a different rate. And it's probably one of my biggest bugbears that we've got to go and request pricing from a bank. Like, just, every single time we're going to ask for it. It'd be much simpler if you guys just gave us your best upfront.
Best offer,
we're going to ask for it. Your staff are going to ask for it. It's going through the process anyway.
Is that a legal requirement that you guys have to do that, or you just want to?
There's no incentive not to do it. Why wouldn't we?
Yeah, that's right.
It's more of a risk for us if we don't get the customer the best deal. Like if we don't go and put that effort in and get that rate, they're going to leave our business, right? So we've got to do it. It is what it is. But I guess now as well, like going back in the day of broking, like the old school brokers, 20 years ago, there was a stigma there that you went to a broker because you had a tough deal that they're going to slip it through and sneak it through.
That's right,
credit cards were going missing and personal loans were going missing and all that sort of stuff. Now with positive credit reporting, where those limits are live and they're listed on your credit file, all that sort of rubbish and that dirty side of what people thought broking was, that's completely impossible. So you go to a bank and they say no, go to a broker, mate. They say yes. It's not because anything's been done differently from a disclosure point of view.
Yeah.
It's an education side of things and knowing how to put together a deal.
Yeah, that's right. And putting it so that it's easy for people, for processors or the auditors to look at and see, well, that makes sense.
Right, storytelling.
Yeah, that's
taking the best bits and talking through the bad bits. And it's impossible to hide the bad stuff these days, like defaults, mispayments. Like it's all there. It's just talking through why it's happened.
You're almost selling the client.
It's a story,
Selling why they should give money to them.
It's almost gone a 360 to a degree. You think back and you hear the stories of your grandparents and whatnot, best tie and suit, going to see the bank manager and begging for a loan. We've got to tell the story like that.
Yeah.
But there is still a significant tech play in the background, which is still making the decisions.
Yeah.
It's the banks then going, right, well, the system said that, but we now need to play, put the human nature into it, and that's where the broker story comes into it.
Now, mate, you've obviously invested in property yourself. You've built homes yourself. So when people are looking, I think that's a very important part. When you've got a finance broker who hasn't been there, we were speaking about earlier just about your own personal, property. If you haven't been there, it's very hard to understand, I suppose the reasoning why the finance is so important if you're not a property owner yourself, or you're not, even if you're looking at refinancing and all that sort of structure on an existing investment portfolio, if you haven't lived and breathed that, it's very hard to really take that, I suppose, first-hand experience and implement it if you're not doing it yourself.
Yeah, and a lot of it comes back to the emotion that the customer's feeling. We put ourselves in a little bit of a risk inside that game in that we hire young staff.
Yeah.
A lot of the time they don't have property, and so they're getting involved with people that are buying their second and third, or building on a portfolio of multiple properties, and there is that risk that they don't have the experience or have experienced that emotion with those transactions. I feel it can be taught through, but there is a level of understanding that is definitely missed when you haven't done it yourself. So I definitely, looking for a finance professional to work with, working with someone who's cut their teeth themselves, it is imperative, or at least a broker who's amongst a business of investors or property owners and that sort of stuff.
And I suppose you're mentoring, your younger brokers, you're passing all that stuff down, because you'd be quite hands-on, I'd imagine, still within the business.
Yeah, I try to be. I mean, and that's, I feel, I definitely feel it in the business when I take a step back.
Yeah.
Like last year I went over to Harvard Business School for a month, and that was sort of the big test in the business and whether it could survive, but look after itself with me not being there. And it went well. I've got a great manager in place. He's been with me for the last 5 years. And so he is able to keep the wheels moving, but then me being there to oversee and be a sounding board, and apparently 16 odd years of experience seems to help out. Like you said number before and it freaked me out. Like, I'm only 34 and have straight out of school into banking, but that sort of the level of experience, being able to go through having been through transactions and having written.
You know a number? Yeah, I was going to say, do you know a number?
I don't know. I've stopped counting. Yeah, I said before there was a reason why I bought a certain car, but that was for 1 year. Like I think, we've got.
So we're talking billions and billions of dollars.
Yeah. I mean, in 1 year we would have been, in our best year we would have done just shy of $500 million. So
that's crazy.
Extrapolate that out over 14 years.
And I think that's what clients need to look at too when they're going for a broker as well. It's the experienced brokers or a team of experienced brokers around them, because there's so many policies or situations that people specialise in, where going to someone like you where there's a team, you guys have seen different things and understand different policies different to other brokers. Like sometimes a client can get disheartened, go to a broker and say, oh no, we can't actually buy a home today, but you can go to another one and go, well, hang on, there actually is solutions for you with a bigger team or more experience as well. So I think people need to look at that with brokers as well. Like if there's just one, that's fine as well. But if they say no to you, it doesn't hurt to talk to more brokers. Or it's like when you said the bank said no to them. Well, the broker just got you the loan with that bank. And we see that all the time. Yeah. It's amazing just having that team and experience, what that can change for them as well. Yeah,
when we refitted out our office back in 2015, we created sort of like a bullpen where everyone sits around. And so I was saying before, like, broker normally has a couple in their pocket, and inadvertently it's probably still how it plays out even inside my team. But you've got guys that specialise or who are comfortable and understand policy with a certain number of lenders. If they've got a client inquiry, it's a quick turnaround to the other 5-6 guys that are sitting around them. All goes in the middle. Boom, big conversation. All of a sudden, it's something that someone may not have thought of, someone else has thrown in the ring, and the client's getting the outcome that they want. Right. So having a business or a team that's been staffed up is that's good.
Buying an existing business, obviously, the Mortgage Choice Brisbane City was already in place. When you took over that, how was, I suppose, the transition into making it Matt and Hannah Cunliffe's franchise opposed to the previous owner, and putting your own spin and culture on that office? Was it a hard transition, or you just got in there and
the previous? He was a legend in his own right, and still is. And I think we knew that transition was taking place a lot longer before it became formalised.
Okay. Yeah.
So I think within probably the first 2 years of working with him, me and another broker at the time, we'd talked to him about buying him out. It is an extremely expensive business to purchase at that point. And between the owner and Mortgage Choice, they came up with a policy or strategy to be able to allow expensive and high-value businesses to be transitioned to a new owner. And then so in 2013, it really started talking about this transition taking place. So I was managing the business from around 2012, and having been in that management role in 2012 through to the actual transition taking place in 2015, we were able to, quite easily transition it into my business. He started to step away in 2014.
Yep.
And so come 2015, clients, referral groups, staff, there was really no, friction in the shift.
Yeah.
So I think it was taking the time. Like if you were to walk in, if I was put my business
Day one,
put my business for sale today, someone buy it tomorrow, that would be clunky as all
Yeah,
hell.
yeah.
And it wouldn't be the smoothness that it was. We were very methodical in how we did it.
And Mortgage Choice, the brand, obviously, probably I would assume Australia's leading mortgage broker.
Yeah, there's another one that starts with A, but we won't mention that.
I can't even think of them. So
you talk about leading. It depends on how you measure them. From a numbers base, from a volume of brokers, market share. Arguably, and I'm biased, obviously. I think Mortgage Choice is the leading broker in the country. From a brand point of view, quality of advice that comes out of the business, length of time we've been around. So I'm biased towards it, but it's made my job a little bit easier because I've got the record. People know who they're talking with already. They come and see
There's
Matt
a certain
Cunliffe.
level of respect associated with you or any of your brokers before you even put your hand out and shake it. Shake because they know, well, Mortgage Choice, this is a reputable brand. It's that trust, isn't it?
Put us on the radio, send us on TV, and then they get to meet the individuals behind it. And that's no disrespect to the single operators that run under their own names. That's what they are still highly successful guys in that realm. It's just the brand of Mortgage Choice, we get that national exposure. Really well.
And mate, last year was arguably one of the biggest years where the finance industry was so heavily under the microscope. As part of the Royal Commission. And I feel like, and there was a bit of a meme going around when in April, May, when the result came out, and they were punishing, they was investigating the banks and on their misconduct and all that sort of stuff. Yet the mortgage brokers, who were the ones that got shafted out of all of that. 12 months or over 12 months now, where's that laying? Because right at the start, it was quite, I'd imagine, fearful time for mortgage brokers right around Australia, because the industry essentially was set to be wiped out almost overnight.
Yeah, mate. January 2019, one of my darkest months ever.
Right.
Personally, I was
I remember seeing suicide rates on brokers and everything went ballistic because there's people that had worked, just for your instance, 15 years to build themselves and have it taken.
Yeah. It's horrible.
Retirement plan, things you based everything on, it's crazy.
The value of your business was almost wiped out overnight.
And as a public company, Mortgage Choice must have taken a massive hit.
Mortgage Choice had a little bit of internal furore going on as well. There was some bits and pieces that were popping up inside the network, and then to have the Royal Commission overlaid on top of that, it was what was going on with the network didn't really affect me. I had to pay attention to it and understand and know what was going on. I didn't see it as a massive deterrent or a negative. But then the Royal Commission laid on top of that, it made for a very interesting time and very stressful, questionable, and some of the thoughts that were going through my head. I was dark. It was a dark space for me, and it was you end up have a multi-million-dollar business that is almost worth zip because of a certain CEO of a large bank that's just thrown us under the bus. Look, coming out of that, I think the Liberals understood what was going on there, and I think their position on respecting where brokers sat in the market and the volume that we do, and that we're not just there to clip the ticket for our own benefit, and then for that change of government, that saved our bacon. Which the bookies got completely wrong, which is great, but
we would be looking at. I was telling someone a completely different Australia if May last year there was a different name read out. We would be looking at no negative gearing, no brokers. The way it would just be a totally different landscape.
100%. So I think we're common sense prevailed at the end of the day. and where we are now is markedly different to where we were last year. People talk through the GFC being a difficult time. We grew in the GFC. It was an opportunity for us, and we just we ran with it. Royal Commission has been testing, not necessarily because credit's become harder to obtain. It's just taking longer to obtain.
Yep.
Cost of funds are cheap. It's super cheap. You have rocks in your head to not be wanting to get debt right now.
Yeah, that's right.
But it's a significantly different process to what it was back then, and even 18 or 24 months ago. Again, another upside of the mortgage choice situation is that we're really strong in the compliance background. So mortgage choice was quite a few steps ahead in making sure that we were compliant well before the outcome of the Royal Commission. And so from a living expenditure side of things, those assessments have been being done for a long period of time. So for the changes that have come down from the Royal Commission, I'll probably get shot by some brokers saying that I agree with them, but I do agree with them. There's nothing that's really come out of it that I don't find is better. It does make for a more rigorous and more strong lending environment for us all. And if we can keep it strong, it's going to be there a lot longer.
And if it's a byproduct of keeping the industry or the mortgage broker alive, then so be it.
Yeah, and we write over half of the business that of new lending written in the country is written by a mortgage broker. I think we were getting close to eclipsing 60%. We may. I don't really pay attention to those sorts of numbers. Numbers are whatever, but people are walking with their feet, and through now just with COVID and whatnot, our phone rang off the hook. Yeah, we weren't making any money. We weren't doing revenue generating tasks, but we were helping people. People are ringing us because they want help, and they're ringing the broker, not their bank. So that just shows
because there's a level I find particularly in the marketplace now that the banks have almost got a level of distrust with consumers. Whereas it used to be, you go to the bank because, like you said, the mortgage broker would, hide things away. But I feel like the mortgage broker's now become almost like the guardian or the protector against the Mr. Big Bad Bank, and my mortgage broker will help me look after me when they try and screw me or whatever, Yeah.
I think, in the Royal Commission, they're talking about our trail and that it's conflicted because we're getting paid by the banks, but we're saying that our customers are our clients, they're the ones that we're working for. And I think clients have started to go, well, hang on, they are working for me. The thing that we find is that customer will still come to us and they'll go, look, I bank with Bank A and I want to stay with Bank A, but I want you to do the deal. And it's not necessarily because of anything other than clients can potentially just be comfortable and a little bit lazy with having to reset up their finances. Yeah. But they'd still rather a broker do it than go directly to their bank.
100%. And there's no, the two-tier marketing or two-tier pricing, if that's not in play, then why wouldn't you?
No.
I know if I had someone who could do it for me, it wasn't going to cost me anything, and I had to do 25% of what I would have to do if I went directly. It makes sense.
I just love the phone call, late in the afternoon. I can just call the broker that I work with and go, this is what I'm thinking, and just run things by. I don't have to wait or muck around and wait or go in to see someone. It's just here's a quick phone call, it's done.
And banks can't unhear or unsee things. So you might be telling the exact same story as if I went to the bank directly for myself, if you did it for me. And I just word the exact same thing slightly differently, and all of a sudden they're like, well, no.
That's right.
Yeah,
and it might even be just to do with your job. I took 30 days off because, I didn't say why, but it might be that, you had a job offer from another job. You chose to take a 30-day span. Some lenders have an issue there, or 31-day span, that if you've been out of a job for more than X number of days, that you don't qualify anymore. But if you can show different pieces of how this come about, that's just one example. Can happen a lot.
So what's the lay of the land now on the back of the Royal Commission? Because it was an amnesty or a 2-year sort of wait off until they relook at it, or
3 years.
3 years, right. So it's not set in stone, but but as long as the Liberal government, and it seems pretty safe. You'll be retired in 3 years anyway.
I was literally having a conversation with my wife the other day. This business, the income structure, the way it is now, if it stays, there's no reason why I cannot continue to do this into my dying years. Yeah. Having a business partner or a manager in place that can babysit the thing, they've been cutting on equity or whatever, but the way that the current way that we're remunerated, passive income is a dream. But when you're looking after your customers in the way that brokers are currently paid, and you're putting the effort in to keep them there is a passive income stream there for us.
Yeah, and let's talk about that, because I think one of the things with the Royal Commission was that brokers were supposedly writing the deal and then just set and forget. And for me, I'm thinking, well, look, if they do that, they're not going to be a mortgage broker for long.
No.
They've probably got 5 years in them. When their trail runs out after year 5, they're going to be looking at an empty book, you know, whereas having a, you know, I suppose a broker who's proactive and consistently, because that's where you make, you know, refinancing and, you know, referrals and, oh, you've got another property, let's refinance that thing.
Yeah.
You know, all that sort of stuff. That's your revenue.
100%. And it's the hardest thing about being a broker is getting leads, right?
Yeah.
But if you've already got clients on your books, you've got the lead there. You just got to make sure that you're looking after them.
Yeah.
You know, we've got a call, like a touch base process within our business where the client's being spoken to, you know, if not every 6 months, at least every 12 months. In the first 12 months, they get 3, like 5 week, 3 month, 6 month, 12 month, and then 18 and 24. Generally speaking, though, people starting to shift their loans or want to start thinking about refinancing around that 2-year space. There's 2 schools of thought there, and there's the churn and burn thought where you're taking them off your current lender, putting them somewhere else, taking another upfront and getting trail paid again, or you keep them where they currently are, reprice them, and you know, look for other opportunity for them where they've built equity and they can go into an investment property or you know, in shares or any other sort of need for funding. So doing that, your trail gets kept in place. You know, some banks start to tick the trail rate up a bit higher as they stay in place for longer. Mortgage choice doesn't really matter to us again because we're paid the same even in trail. It's all performance payment based on on the way we work within the business. But this whole trail is money for nothing. Every day I've got to turn the lights on. I've got to send my staff to work. I've got to pay the rent. You know, we're there for the phones to ring and for us to help the customer. You know, even last night I'm texting clients at 9:30 at night. You know, that's you say before about the bank. You know, their doors are shut. 4 o'clock in the afternoon.
Yeah, that's right.
And most of the time when we have questions, it's after work hours for most people.
Yeah.
So after 4, you're done. You can't talk to anyone.
No.
So I know most of my calls are like 7 at night.
Well, you can, but you're on hold now for an hour and a half because of COVID. Like that's so you're not speaking to anybody.
And did you notice let's talk about COVID now that it's been brought up, because we noticed a few issues in March. I think everyone experienced issues in some sort. I suppose based out of fear and all sorts of things, but we noticed that a lot of the banks, particularly that had resources staff-wise internationally, went through, and you're probably going to have more intel on this or more expertise around what you experienced, but we found that the banks were sort of unprepared because a lot of the resources were deployed internationally in call centres offshore, overseas, who maybe hit harder with COVID and layoffs and all that sort of stuff. Then this wasn't I suppose the appropriate or the volume of domestic or staffing resources locally to be able to pick up the slack there for a month or so. Did you find that?
Yeah, 100%. I think a lot of that's to do with some of the Asian countries there where the processing centres are.
Yeah.
Those going to work from home arrangements and the banks not being comfortable with the data security.
Correct.
And so that's all. Hang on a second, we can't send them.
Right.
We can't do anything here. So then their onshore resources are cooked. You know?
Yeah.
And we have a couple of assistants sitting over in the Philippines, and we had the same issue where they were blocked out for a period of time there until we got comfort around the data security within their working environment.
So important, right? Especially if you're a major bank, you're holding. Chances are, 1 in 10 people of Australia's,
serious information,
serious information, dangerous information.
Yeah.
And that's what I, found, even in from a build standpoint, whereby even the processing of drawdown claims and that sort of stuff just took longer.
Yeah. I think, and the banks started to inflame themselves because they started to drop some really hot rates and deals. Like ANZ is an example.
I know.
We got to a point where there were 48 business days to pick a deal
SLA
up.
turnaround, and then they'd come back and ask for an extra pay slip, and then you're in the queue again for another 40 days.
Like to give them some props in that they did, for us anyway, they were very good once they got to the deal.
Yeah.
And we've got a very good working relationship with our assessors there. But just that lead up time, we loaded them up as well, and then all of a sudden we just can't, commercially we cannot send it. We still have to present it to a customer, but this is
these
what
are the
comes
terms and
with it.
conditions.
If you're buying a property that's due in 14 days, you cannot consider them.
And that's right. And if someone, exactly right, they're like, I know personally, I lost a red hot deal on the Sunshine Coast, and the client was sitting there done, this absolute perfect client, stack of equity in a couple of houses in Melbourne and Sydney. Yeah. You couldn't get a better client. It's what dreams are made of. but they pulled the developer pulled the pin because he wasn't going to wait.
Yeah.
And after 40 days or 30 days or whatever, it's over.
And that's the thing.
And there's no way to speed that up. Like if it is what it is.
Yeah. Selling rate, selling product, selling rate and incentives. It's the easy game, but it's not all. And that's where talking to the customers through that process and making them realise what's going on in the background. And that's what I think we find we're having to do more of, and that's where the value in the broker situation, there's value added by brokers that can do that, and that is to educate the clients through the process. Like we do this thousands of times a year, right? We're all involved in transactions, frequently. Customers might do it once every two.
Yeah, that's right. If they're lucky, And
if you can impart a bit of education so they know what they're doing, you're not going to lose them. They're not going to go and do it themselves because you've taught them. They're going to respect what you're doing, and they're going to come back again.
Fuck, that was easy with Matt.
And they're going to understand as well.
Yeah. He told me about all the problems he was having. Why would I want to do that to myself?
Yeah.
Matt, I'm looking at buying a property in New Farm.
Yeah.
Here it is.
Yeah, exactly right. And it's it's about it's just that openness and honestness, and you just go, if you expose yourself a little bit to the customers enough so that they can get a bit of empathy for what you're having to go through, you'll get it.
And I think that's like a lot of people, like when the intermediaries who are liaising or assisting someone with something else, with a product or whatever, they try and hide and make it seem it's all rainbows and butterflies and everything's perfect, Mr. and Mrs. Smith. Don't have to worry about it. Yeah, no, this is all going to be good. But getting on their level of, this is what you have to go through. This is just the way the finance landscape is right now. Yet ANZ, unfortunately, it's going to be longer.
Yeah,
that's the reality of it. And they're going to come back and they're going to want updated pay slips by the time 40 days comes around. They're going to want to know why you put $100 into your Sportsbet account in November, and you got to explain that you back Winks in the whatever it may be.
Yeah,
you got a rough time. So they're going to want to know that stuff. And I think just being upfront and this is the rigmarole that we have to go through.
It's not doom and gloom all the time. Like, there's obviously a good percentage of deals that are super slick and they just roll through as they should.
Yeah.
But it's as you said before, trying to hide all those problems.
Yeah.
When a problem does arise and it's a real problem, if they just thinking it's rainbows and butterflies and you go bang and drop an atomic bomb on them, it rattles the whole process.
Yeah,
whereas they're getting drip fed bits and pieces the whole way through, and they're getting updates and a good update and a bad update. And, it's
Bell came in short, Bell's good. All that sort of stuff.
It's the openness and honestness, and that's what I find generates those loyal and sticky customers. They come back because you're just not bullshitting them.
And when something comes up, you can then talk about, this is what we warned about. Okay, we just got to work through this. It's not a problem. Where beforehand they could get very upset.
Yeah. And we even find people come back with, after the fact that they know that we're bringing up problems to them. If they're having another problem, which might not even be related to the finance application or whatever, like later on down the track, like I'm talking years. Like I get customers that unfortunately come back to me because of divorces and all that sort of stuff, and they start to come and ask for advice and help and all that sort of jazz. You know that when when they're coming to you for that sort of help and they've got confidence to share that sort of information with you, that you've done the right thing.
They trust you. A high level of trust. So what's the lay of the land now in the finance space during COVID-19? Obviously, we went through March, pandemonium. No one knew what laid ahead.
Yeah.
April, or you sort of got to May, June, everyone's like, I think it's over.
Yeah.
And now we've seen how quickly that can change, like in Melbourne.
Yeah.
Where are the banks, positioned now with so much, with like the things like JobKeeper and those sort of factors in play? Where is their comfort level in terms of, are they still seeking volumes of business? Are they being more skeptical? What's the go there?
My opinion, money's on tap, right? For the right applicants and the right transaction. There is definitely more questions being asked around employment, employment stability, if they have been on JobKeeper or what have you. Making sure there's a clear-cut path back to regular employment. Likes of Virgin, that sort of jazz, probably not going to see a huge amount of success for people that are still unknown as to whether they're keeping their jobs there. Just as an example, but businesses that were impacted that have now come back online, we're starting to see them. The banks, they're asking the questions, and as long as they're comfortable with the documentary evidence that comes out of those questions, then there's no reason for the deals to not go through. people that are probably going to be mostly impacted, hospitality, workers, retail, that sort of stuff, where
tourism,
it's like that.
Gone.
Businesses are shut down, or at least closed up for the period of time. And this is not to be sort of what's the word here, industryist, but the types of people that are employed in those things probably aren't going to be our home buyers that we're working with. These are casual employees that are, probably haven't got the deposits that they need to go and buy property. So so from a financing perspective, we're not seeing deals being lost a huge amount as long as there's a good backstory and a plan to get through. Self-employed, that's probably a harder client to get through, but the support that all that the banks are checking there is they're just asking for BAS statements to show, sort of where the income level's been now versus where it was last year. Bank statements to verify income's coming through. So a little bit more documentary evidence to support the application as opposed to financials from 2 years ago. But so money's cheap, money's available, and it's just a little bit more effort. And if people are prepared to put the effort in, which why wouldn't you be for to get the finance to go buy that property or save some money on your interest rate and that sort of jazz, you're going to get the deal done.
Yeah. And how's the valuation side of things going for you? Because that's a sort of another unknown. Like everyone's talking, or especially media, but that's typical about the arse falling out of the property market. It's yet to happen. You've even seen the share market bounce back.
Yep.
What because you're probably going to say it's not the case, but I just can't help but think that the banks are instructing valuers to do their job. Yeah, not short value, but giving them sort of, I suppose, a little bit of an indication on where where their comfort level is before they go. And
I think we saw our first commentary around COVID like in the second week of March. That's we were like, when is this going to start popping up in our valves? And next thing you know, boom, there's a comment there in the valuation about COVID. In the resale space, there hasn't really been any impact there. We're seeing clients that are surprisingly happy with valuations on their existing properties coming in. I've got clients going, holy, I didn't even expect that. And I gave you an example personally before. I didn't expect the value I got on my property, especially in the current climate. So I don't necessarily think the banks are putting pressure down on them. I've seen some new stuff that we've had issues, but that's not anything new to COVID. We've always had interesting times there, and you could send 10 different values out and get 10 different results. One person has a bee in their bonnet, the rest don't. So I don't think COVID's had an impact yet. Obviously, all the support packages that the banks have had to be able to keep people in their properties and their loans and not default has obviously helped keep the market buoyant. We had a lot of bullish investors start ringing the phones early in the piece, wanting to get prepared to be pre-approved for finance. They can go buy all these fire sales that are about to come up, and they're still sitting on their hands waiting.
Right,
So we haven't seen anything drastic in vals yet.
Yeah, let's talk about. You mentioned the banks being a little bit, or the support packages for everyday consumers to help them get through what is a challenging period. Correct me if I'm wrong. With that, was government was that off the bank's own bat, or the government legislated that to make them do that?
I think the government's come out and said the banks need to do this.
Yeah. Okay. Yeah.
The banks have then, like, no one's getting a free ride. You might have your payments paused for 6 months, but your interest is still getting capitalised. The banks are making it well known to the people taking those support packages on board.
So talk about that, Cap. What is the detrimental impact? Because it's like the super. As soon as you could take 10 grand super out of your account, people who didn't even need it took it out.
You talk about that. So you asked before about how finance applications have been impacted. People went and did it. You said, right? Everyone's gone, boom, 10 grand out of my super, no worries. That's one of the big questions that banks are querying when we lodge an application. Hey, we saw a credit to their account for 10 grand that's come out of their super, yet you're telling us that their income's fine?
Yeah, right.
And they've spent all the 10 grand.
Like the 10 grand, to be able to grab that from a government point of view, was you had to be in strife.
Yeah.
So
I remember seeing, I went to Pack Fair the first day it opened, and I saw a line, no joke, around the corner at Louis Vuitton.
Yeah.
For people who were buying like Louis Vuitton from what I only can imagine. This is the middle of a crisis.
They go spend that 10 grand all on Louis. They've just gone and spent 20 grand at Louis, because when everyone's gone taking that money out, all their super funds are taking a whack because share prices are dumped, right?
Yeah.
And so next thing you know, we've got share prices improving, but everyone took their money out at the bottom, so they've just lost. They had, a
They've
fall in
already
the value.
taken 48% off, or 30% off the market straight
Very
away.
expensive support package.
Yeah.
So I think that was a risky move. Yeah, it meant the government wasn't having to dip in their pocket. People were taking out of their own out of their own mouths, but.
And low entry cars too. Car yards are reporting their highest sales in years.
We got clients that are sales agents for cars, and one of the blokes at Volvo in the city said that they just had an absolute crazy June. Sorry, But I think a lot of that it comes into the instant asset write-off limits that have been jacked up and all that sort of stuff. So the government's done a good job to try and keep spending happening. Yeah.
And it was, like we said, risky taking 10 grand at his super because that's a lot of capital out of the market.
Yeah.
There's
It'd be huge. Yeah.
a lot of money taken out of the share market.
Yeah.
Overnight.
Yep.
And I mean, luckily we haven't seen any high profile victims of that. But Jesus.
I think, and it's from back to the financing and getting finance approved and that sort of stuff. If you've taken out and parked it, you've got a good story to tell still.
Yeah.
And and legitimately, you might have had a downturn in your employment. You've gone on to JobKeeper, and that's all there. So people that are savvy and that took the money, parked it, and they're going to use it for investment purchase or a property purchase, fair play.
Yeah, fair play. Yeah.
Yep.
And so, what was I going to say before that? COVID-19. So the bank holiday. So what's the detrimental impact of going on your holiday? Because a lot of people that didn't need to go on the holiday went on the holiday, but they don't understand the detrimental effects that has on the life of your loan.
Yeah. Well, there's two effects again in relation to that the super fund takeout.
Yep.
You go and apply for finance whilst you're on a bank holiday or a repayment holiday. Hang on a second. Why are you guys on a repayment holiday yet you're asking for more finance? We've had that happen a couple of times.
That would show on your record, right?
100%.
Once you're on a holiday, that'll always be on your record.
So the detrimental effect is that, so when you're paying principal and interest or interest only or what have you, you've got a bank taking the interest out of your loan or debiting it from your loan, so your balance goes up, but then your repayment comes in, balance goes down. Whilst you're on a repayment holiday, the balance is just tracking up. So when you're applying for finance and you provide statement evidence of your performance on that loan, it's just increasing. There's no credits to it. So certain banks want to see statements for all deals, like all your loans that you've got in place, and so they can check that. One thing which I'm yet to see how it's going to play out, and I've been told that the banks are supposed to hold back, but it's whether this is going to flow through to credit files. So under this positive reporting scheme where the banks update credit files every month with the repayments on their home loans and their credit cards and whatnot being met on time and the likes.
Because normally it would, right? If you pre-COVID, if you went on,
it shows you'll have a period there where you have month where it's gone 1, 2, 3, like we've gone behind,
and your credit rating would
drop,
would suffer. Yeah, that'll be interesting to see whether that. You'd have to think so because it's really. I mean, whilst this is unfortunate and so unique, at the end of the day, from a consumer standpoint and a business standpoint, you've got to sort of, if banks are taking a $500,000 risk, you're going to want to know how that they fared and how well that client was positioned.
Yeah. And there'll be I mean,
to deal with,
and each assess will be different, but
correct.
They'll have
and that's probably why that goes towards why things taking a lot longer now as well as that.
So many
variables, and it's making that common sense call.
Yeah.
How it will be, I think the most interesting time for us is going to be from October, November, December, leading into Christmas.
Yeah. Is a JobKeeper, it's the end of the month this month or next month?
Down.
Yeah.
Steps down to 1,200.
Yeah.
And then and the reporting requirements increase, and then again in January, or March, whatever it is. Yeah.
And then it's viable businesses only from that point on. Whereas now it's, if you're on your ass beforehand and your JobKeeper came out, gave you another 6 months to.
That's going to be the scary thing, is it's what's happened to businesses that have become reliant on this influx of money.
What happens when it's not coming in anymore? What's that look like, and what's the unemployment?
There's a moratorium on paying your tax. I mean, if you had a tax issue before, that's been postponed. You've had more money come into the account. You've got credits going into your integrated account. Like, there's all the stuff that's going on. Smoke and mirrors. We're all still spending to try and keep these other retail stores open and people in jobs and whatnot. Once all that assistance stops, then what?
Yeah, that's right.
And everyone's postponed everything.
Yeah.
Not a lot of businesses have.
Yeah.
It's like you said, they're faced with that and the other bills that come with it.
Yeah.
Mate, from a new housing side of view, that's where obviously we focus in on. Now, the big news, I mean, I was saying it to someone yesterday, it's funny from our point of view. We're in a recession, right? But on the back of the government stimulus, home builder grant and all that sort of stuff.
I'll tell you why in a second. Keep going.
I've never been inundated with so much inquiry in a recession.
Mm-hmm. How's your conversions on it?
That's what we wanted to speak about, because what we are noticing is that this home builder has come up. It's been a dry period of time for sales agents, land developers, apartment developers, all these people who have maybe struggled for the last 6 months in sales. So all of a sudden the tap is turned on and they just can't drink enough.
Yep.
But what they don't realise is most of the water is dirty, and they just yep, no worries. You got $500, yeah, put it on that block, no worries. And so we're seeing sellouts of stages, but we're seeing lots now start to come back to the market. But unfortunately, the qualified buyers who were qualified and ready to go, did have finance in place or were ready to commit, have now lost the opportunity and have gone elsewhere.
Yep.
So on the back of the home builder, the inquiry is up. But I read an article, I think, in the Financial Advisor this morning or yesterday about the actual conversion into jobs as from a construction standpoint hasn't equated to what was originally reported, because in the first 2 weeks it was like 13,000 applications for home builder in 2 weeks.
Yep.
In a challenging landscape of finance as it is, it's hard to put one and one together.
Well, the biggest issue we're facing is we haven't got a bank yet that's committed to taking on as funds to complete.
Yeah, that's right.
Yeah.
So you want to bring this package in that's meant to stimulate building, going on, yet you haven't, the people that it's going to work for can't actually use it,
that's
therefore
right.
can't close out a deal.
Yeah.
And so the guys that are getting it are people that were already building.
Yeah, that's right.
You've just moved them.
Yeah.
And that's what I'm concerned about, like next year. You've just moved purchases from that we're going to buy next year, or they could buy now, forward.
Yep.
But the ones that couldn't really afford it but need that funds to complete can't buy it in 6 months' time. So we're going to still have a dry spell coming because we've just moved purchases forward.
Yep.
They're not going to be there
No.
in 6 months' time that we've got, in 4 months' time that we've got to face either. It's really, when I deal with it all the time, people like, I'm looking to buy, I'm like, this gives you no benefit at all. Like you still can't buy the home. And how many people before that 13,000 applications who were talking to brokers during COVID? How many new first home buyers were you coming to see? People just worried about their jobs.
Yeah.
So when we seen land sell out, I'm like, 50% of them won't even go ahead.
Yeah, and 'cause I mean, a lot of the assessments were being done. Like we were getting fed info from the banks that saying we don't, in Queensland especially, we don't even know the application process yet, so we can't commit to how this is going to look. And we've got banks taking applications and pre-approving people based on those funds potentially being there. Then all of a sudden, for this application process to come out and it's driven directly by the client, one slab's down, and no involvement of the bank or the funder, and the only person getting a hold of that money is the client, they've missed the mark.
Yeah.
All they had to do was replicate the first home buyer grant application. Done.
And if you replicate the first home buyers grant, the success rate and the amount of people that works for who it's meant to work for, like it's an owner-occupier grant, but really it's a first home buyer.
Yeah. But it's not even, it's just replicate that application process.
That's right.
Let the bank be the agent.
Yeah.
Yep.
Run it.
Run it.
You get the stimulation that you want.
Each bank will have a policy, but other ones will fund it earlier.
Which they have now. They have policy around first home buyers grant being used as funds to complete.
Yeah.
Like you can't just straight off the bat just use that, right?
Yeah.
So there's already policy there. The banks haven't had to rebuild their own policy.
Yeah.
The only the stick in between the wheel here of stopping this cog turning properly is the application process.
Yeah. And then the other thing,
Simple fix, you reckon?
Yeah,
But
yeah, that's right. Yeah, apparently there's smarter people than me and you, mate. And the thing that, like the other part where they missed the mark, and I understand the reasoning why they gave builders 3 months to start from construction from contract date, but with the finance, delays in some aspects, how they are, from signing a contract to getting on site, sometimes you can be looking at a 6 to 8 week finance period, let alone getting on site and council approvals and all that sort of stuff.
Yep.
So I suppose there's a little bit. You can tell it's been written by someone out of the industry. You can tell it's someone who's gone to university with a degree in economics or whatever and hasn't been on the front line in terms of what is the reality of what happens out there.
All they've done is they've just driven control of the market to the banks, right?
Yeah.
The banks is choosing that they cannot accept this as these funds, and it's the banks that get to control it. Like, if you think of it that way, like it's the banks, the ones who could say yes.
Yeah.
They'd prefer the application process to be changed, but they could say yes.
Yeah. And the other worst part is that it's location dependent. When you have the contract date within 3 months, some areas don't have land registered for 6 to 12. So you have a whole area like Sunny Coast, that's off the books. Any first home buyers that want to buy there, you can't buy there.
Yeah.
If you want to go for the 25 grand.
You just got to delay the contract, the build contract out.
That's right. With finance, we just get buyer signed and then you can go from there and look at their application.
Yeah, you could probably, from a finance point of view, you could probably go down the path of like a indicative, like a fixed price quote, which then doesn't mean a contract sign, because we can go and get vals based on fixed price quotes. Fixed price quote, a schedule of finishes plans, and we can get it valed.
Yeah, right.
Don't need to, as long as the valet can walk on the lot.
Yeah.
Right, but you don't need that contract signed at that point. The valuer is going to comment that there's no contract signed, and the bank will probably ask for it to be adjusted later on. But at least you can get it rolling through, and then you haven't started the clock ticking on that. On that 3 months.
Now, mate, it's been really, really awesome to chat to you today. We've got to start to wrap this up. But tips for people looking to get finance right now. Why should people be looking at, I suppose, yourself and Mortgage Choice as a partner broker? And then what should people be looking for in terms of when they're actually trying to get finance?
Yep. It's the preparedness and the education that we provide the client to be able to make their journey through the finance process enjoyable, and one that they actually get more out of than just a big dirty home loan, right?
Yeah.
The being prepared, like I say all the time, I get sick and tired of saying, well, I don't get sick and tired of saying, because it's the number one key to getting your deal done. Yep. It's preparation, right? Gone are the days where you just go and say, here's my pay slips, give me a loan. It's about knowing your expenditure. It's about making sure that you're dialing out those unnecessary expenses, or not having a big punt every other weekend. It's knowing personally as the applicant, knowing your financials a bit more in depth than you have previously, putting the effort in up front so that then you can assist in your process, in your application being easier for you and the people involved. So from a Mortgage Choice standpoint, we try to get in as early in the piece as possible to give clients the education they need to understand what the banks are looking at.
It's about having that mindset, isn't it? Like, you've got to be like, and that's one of the other frustrating things of the home builder, is that people who aren't in that property mindset are now wanting to buy a property. Like, you should be like speaking to you early in the phase, having feedback, say, yeah, mate, well, look, you're in an okay position, but this is what you need to cut back when you're punting, or do these sort of things. Get in the mindset of being a homeowner, because the banks are going to want to look at a track record of you being able to fulfill your obligations.
100%. And we have no issues. And that's one of my biggest things right from when I've started as a broker, is always giving every single person the time of day, however much time they need to walk through their current situation, put together a bit of a blueprint on what they need to replicate before they then kick off. They might not be ready now. They might not be ready in 6 months. But 12 months, 18 months are going to come back.
The Australian dream.
And potentially, there's chance they're going to tell their friends and all that sort of stuff. And, I might not get that deal then. I think one of the blokes said it the other week, same sort of thing. It's like you give everyone the same time of day.
Yeah.
It might not be them, but it'll be their friends.
Yeah, that's right.
Or their family, their parents, right?
Yeah.
So, Jackson.
Oh, you actually watched this?
Yeah, I did.
Oh, you watched the episode. Oh, there you go.
I think I said that part. Yeah.
But it was with Jack. So
but you're right. It's like when I used to go to the meetings, they didn't end up sometimes being the buyer, but because I took that time and educated them, actually showed them the steps, and this is how we can get there if you're not ready today. Next minute a brother would call me, a sister would call me, and it's just weird how it happens, because you took that time and you gave them that opportunity, and here's the path to it.
It's that trusting, and that's the difference between, I think, and that's good broker, good salesperson, good person in a position where we have the opportunity to impart education on people. If you give them the time, regardless of their situation and what you're going to get out of it, if you put away what you're going to get out of it, what you get, that's just a byproduct of you being a good human, right?
Yeah.
And so if you produce that in a business environment, you get fed.
It'll come to you.
Yeah, what goes around comes around. That's what one of my mentors used to say. Add value, and the money will come. Just
Yep.
keep adding value to people. Whatever you can do to help them,
Yep.
eventually the tap will turn your way. It might not be today, it might not be in 5 years, but eventually you'll reap the rewards and that value will come back.
That's it.
Now, mate, thanks so much for coming in. How do people get in contact with you or your team?
Easiest way to get in contact, either jump on our website, mortgagechoice.com.au/Brisbane City, or give me a call in the office, 073211 7744. Sing out. Find us on Instagram, Mortgage Choice Brisbane City,
LinkedIn, Facebook,
all those good
stuff.
things. We're there.
TikTok?
You can find us. Not TikTok.
No,
just yet.
Mate, Matt Cunliffe, Mortgage Choice, thanks so much for coming in, Matt. Really appreciate
Thanks for coming,
it.
buddy.
Cheers.